Very good morning, everyone. Let's start with the next practice of TDS chapter. So this is from your study material, page number 7.62, illustration number 11. If you look at it, it says, Mr. X sold his house property in Bangalore as well as his rural agriculture land for a consideration of 60 lakh and 15 lakh. So he has sold his property. One is the house in Bangalore for 60 lakh and other is rural agriculture land for 15 lakh respectively. 2Y on 1/8/2024. He has purchased the house property and the land in the year 2020-23 for 40 lakh. So it is his cost given to compute the capital gain. So he has sold it for 60 lakh. He has purchased it for 40 lakh. And you understand rural agriculture land is not a capital asset. There would be no capital gain also. And 10 lakh respectively. Whereas rural agriculture land was for 10 lakh. So for rural agriculture land, we don't have to do anything. There would be no capital gain. And in fact, there would be no TDS also. Because we understand there is a section 194IA. Section 194IA says that whenever you are actually purchasing a immovable property, whenever you are purchasing a land or a building, except agriculture land, so whenever you are purchasing land or building, and if it is of 50 lakh rupees or more, even 50 lakh rupees. So even 50 lakh rupees would be there. If you are purchasing a property which is 50 lakh rupees or more, then you have to deduct the TDS at a rate of 1%. 1% should be the TDS rate. And also, when we will see this 50 lakh, we will be seeing the purchase price or the stamp duty value. So purchase price or the stamp duty value, whichever is higher. If any one of them is higher than 50 lakh rupees, then 194IA would be applicable. Let's say, for example, you are purchasing it for 45 lakh, but the stamp duty value is 55 lakh. So yes, any one of them, whichever is higher, 55 lakh. So 55 lakh, on this 55 lakh, you will be deducting 1% TDS, but not on the rural agriculture land. The stamp duty value on the date of transfer is 1/8/2024 is 85 lakh and 20 lakh for the house and the rural agriculture land. See, for rural agriculture land, there is no issues. But for the house, the stamp duty value is 85 lakh. Okay. And he has sold it for 60 lakh. So he is selling it for 60 lakh. It means that we are purchasing someone who would be deducting the tax. He will say that my purchase price is 60, but my stamp duty value is 85 lakh. So whichever is higher, so 194IA, we will deduct TDS on 81% of 85 lakh, whichever is higher. Correct? Now, what are they asking? Examine the tax implications in the hands of X as well as Y, and the TDS implications also, if any, in the hands of Mr. Y, assuming that both X and Y are resident Indians. So they are asking about both the buyers as well as the sellers, that what is the tax implication, and also in the hands of buyer, Mr. Y, who is the buyer, what would be the TDS implications also. So see, for seller, what would be the tax implication? For seller, capital gain will arise. For the seller, capital gain will arise. And for the buyer, has to deduct TDS also. But in the hands of buyer, there would be one more tax implication, that would be IFOS, income from other sources. Why? Because he is purchasing a capital asset at a lower value. The stamp duty value is 85 lakh and he's purchasing it for 60 lakh. So 25 lakh would be his IFOS income also. I believe that you are able to recall this provision of IFOS. So I have taught you in the classes that it is how the people are turning their black money into white. So he is saying that he has purchased it for 60 lakh, but the stamp duty value is 85 lakh. So if the difference is up to 50,000, then we are okay. But if the difference is more than 50,000 rupees, then we will make it taxable. And also in case of building, land or building, we see if the difference is even 10% of the purchase price, then also we are okay. So if we will see that you are purchasing it for 60 lakh, if I'll do 110% of this also, if I'll add 10% also on it, So if you would have purchased it up to 66 lakh, we would have been okay with it, because up to 10% difference, we are okay. So if you have purchased it for, it is for 60, but if you, the stamp duty value would have been 61, 62, 63, 64, 66, up till 66, we are okay. But still the stamp duty value is higher. So the difference is more than 10%. So in your hands, there would be IFOS income also, and you have to deduct the TDS as well. And in the seller hand, there would be a capital gain. Capital gain on sale of house property, but not on agriculture land. And in the hands of seller also, section 50C would be applicable. 50C, why? Because you are actually, your consideration price is less than the stamp duty value, and the difference is more than 10% also. So 50C would also be applicable. Have you understood? In the hands of seller, capital gain will arise, plus 50C will come into 50C will come into picture. Second, in the hands of buyer, IFOS will also arise, and they have to deduct the TDS. This is what you need to write it over here. Everybody understood this? Now, let us write this. This is illustration number 11. Illustration number 11. X implications in the hands of seller, who is Mr. X. On rural agriculture land, no capital gain. On house property, capital gain will arise. And how much would be the capital gain? The full value of consideration. He's selling it for 60 lakh. The stamp duty value is 85 lakh. So you will apply section 50C over here. If you don't remember the section, don't write it over here. But if you remember, please write 50C. What you will write? Stamp duty value is more than 110% of the selling price. So it is 85 lakh, which is more than 110% of 60 lakh. Full value of consideration would be 85 lakh less cost of acquisition, index cost of acquisition. Let's see that when he has acquired it, when he is selling it. So it is given to us that he sold the property on 1/8/2024, and he has purchased the house property in 2023. So in 2023, he has purchased it. Now, please tell me, for land and building, what is the holding period? 2 years. So if you will see that this is not, as of now, that 2 years has not yet expired. He has purchased the property last year and he's selling it in this year. So it would, there is no 2 years are not completed. So it would be a short-term capital gain. So no problem of indexation also. So 40 lakh rupees is his purchase price. So cost of acquisition is 40 lakh. There is no expenses on transfer. There is no improvement. So 45 lakh is the short-term capital gain in the hands of the seller. And now, in the hands of buyer also, in the hands of buyer, Mr. Y, there would be IFOS income. Why there would be IFOS income? Because he's purchasing at a lesser value. So in the hands of the buyer, IFOS would be the stamp duty value of the house minus consideration paid stamp duty value is 85 lakh minus consideration paid, he is paying 60 lakh rupees. So rupees 25 lakh would be his IFOS income, and you can write it as stamp duty value is more than 110% of purchase price, or rupees 50,000. See, the difference is more than 110% of the selling or the purchase price and 50,000. Therefore, we are making 25 lakh taxable in your hands as your IFOS income. Everybody's okay with this? Then there would be a TDS to be deducted by Mr. Y. How much it would be? Under section 194 IA, it is actually 1% of purchase price or stamp duty value, whichever is higher. If it is exceed 50 lakh, so my purchase price is 60, my stamp duty value is 85, so whichever is higher, it would be 1% of 85 lakh is equal to rupees 85,000. So they have to deduct 85,000 rupees as the TDS under section 194 IA. Everybody got it? Let me know once done.
Done, sir.
Okay. Should we proceed?
Sir.
Okay. Question number 12. It says, Mr. Sharma is a resident Indian, age 77 years. So he's a senior citizen, 77 years of age, gets pension of 52,000 per month from UP state government. Okay. The same is credited to his saving account in SBI Lucknow branch. So he has a bank account in SBI Lucknow. Okay. And he's getting a pension. In addition, he gets interest at a rate of 8% per annum on the fixed deposit of 20 lakh with the said bank. So he has a fixed deposit of 20 lakh and the interest is 8% on that. So 20 lakh into 8% is 1.6 lakh is his interest income also on fixed deposit. Guys, he is a resident senior citizen. Fixed deposit, he's getting interest. And if he's following default regime, then it's okay. But if he's following optional regime, then 80TTA or 80TTB, 80TTB he will get. Correct? So he will get 80TTB because he's a resident senior citizen. And how much is the 80TTB? Is the interest reduction is interest on deposits. These deposits can be saving account. This can be your other bank deposits also, like fixed deposit or recurring deposit as well. So maximum deduction is 50,000 rupees. He will get in 80 TDB if he follows optional regime. Okay. So he has a deposit of 20 lakh. Out of the deposit of 20 lakh, rupees 2 lakh represents 5-year term deposit made by him on 1/4/2024. So out of 20 lakh, he has actually made a deposit of, out of 20, 2 lakh is for 5 years FD. 18 lakh was normal FD. Out of 20, 18 lakh was normal FD, but 2 lakh is for 5 years deposit. So we understand that whenever you deposit the amount for fixed deposit for minimum 5 years, there's an 80C deduction also. So 80C deduction he will get, that he is depositing 2 lakh in FD, but maximum 80C he will get of 1.5 lakh rupees. Understood? 5 years term deposit, 5 years FD in a bank. Maximum 1.5 lakh, but 80C is again available only under optional regime, not under default regime. Now, interest on saving bank account credited to SBI account is 9,500. So 9,500 he is getting an interest on saving account. So will he get 80 TTA? No. TTB. See, you can get only one of them. So if you are eligible for 80 TTB, you will not be allowed 80 TTA. Correct. So anyways, his interest is 1.6 lakh now from FD and 9,500 from the saving account. So his interest income will become 1,69,500. But 80 TTB, he will get maximum 50,000 provided he is following optional regime. So I think that the question will, because most of the information which is mentioned here is related to deduction. So I believe that this question would be saying about optional regime. Okay. From the above facts, compute the total income and the tax liability of Sharma for the assessment year 25-26. So we have to compute the total income and the tax liability, assuming that he has exercised the option of shifting out of the default tax regime under 115 BAC. So let us solve the first one first, then we will see the next questions also, next part also. And right now we need to compute his total income. So what type of income he is getting? He is getting a salary income, although it is pension, but we understand that pension, if you are getting, you are an employee or ex-employee, then it is taxable under salary. So 52,000 per month is the pension income. Then he has interest income also. Let us do illustration number 12, first part. Illustration number 12, first part. Computation of total income and tax liability of Mr. Sharma, assessment year 25-26. So he is getting income under salary, which is pension, 52,000 into 12. Nothing is mentioned, so obviously into 12. So this is 6 lakh. Let me write it here. 6,24,000. Nothing else is getting. So this is his salary income minus standard deduction. Since he is following optional regime, 50,000 would be the standard deduction. $574. 5,74,000 is the salary income. Does he has any other income also? Yes, he has income from other sources also. Interest on FD. 20 lakh is the FD at rate of 8%. So it is 1.6 lakh. Plus he has saving account interest also. It was 9,500. So 169,500. This is IFOS.
7,43,500.
43,500.
$7,43,500. This is his GTI minus chapter 60 deductions. Now there is section 80C. Why? Because it's a 5-year fixed deposit. How much of 2 lakh rupees he has made, but maximum it is allowed of 1.5 lakh. So 80C he will get 1,50,000 rupees. He's not making any other investment, so no other deduction. But 80 TTB he will get because he is a senior citizen. 80 TTB. 80 TTB is the interest on bank deposits, interest on deposits, or rupees 50,000 whichever is lower. So his interest on deposits, bank deposits 1.6 lakh 9,500, 169,500, or 50,000, whichever is lower, 50,000 rupees he will get. 169,500 or 50,000, whichever is lower. So 50,000 deduction he will get it over here. So his total income comes to 5 lakh 43,500. Everybody done till here? Now he is a senior citizen. Is he a super senior citizen? No, he's not 80 years of age. He's 77, I believe. So he's 77 years of age. So, and he's following optional regime. So the slab rate would be applicable is 0 to 3 lakh nil, 3 to 5%, and 5 to above 5 to 10 20%, and then 30% above 10. So he's not going above 10. He's going 5,43,000. So text one above, does it has any special income? It does not have any special income. So text one above, first 3 lakh is nil. Next 2 lakh at rate of 5%, 10,000, and remaining 43,500 at rate of 20%.
8,700.
Correct, 8,700. So 18,700 is his taxes. Plus, would he be eligible for rebate? The answer is no. In optional regime, if your total income is up to 5 lakh only, then only you are eligible for rebate. Here you will not be eligible for rebate. So less 4% health and education cess.
148.
348.
748, sir.
90. Correct? 9048. Oh, sorry.
The 748 says
748. Correct.
$19,448.
19,448.
Sir, 19.
Is it correct?
Yes, sir. Sir,
This is your tax liability, and you can round off. So this was the answer to the first part. Let me know if it's done.
done, sir.
Okay. The second part says, what would be the amount of tax deductible at source by SBI, assuming that same is a specified bank? Is Mr. Sharma required to file his return of income for assessment year this if taxes deductible at source has been fully deducted, examined? So now what will happen is, we have a section. If you remember, we have a section 194P. What is 194P? 194P says that if a person is 75 years or more, if a person is 75 years or more, 75 years or more, and he is getting only two types of income. One is in the form of pension, and other is the interest from the bank. And they both are coming into one bank only. If they are going into one bank only, which they call it a specified bank. So if you have only two types of income, you're 75 years of age, plus if you have just the pension income and the interest income, and which is coming in one bank only, then that bank is called a specified bank, and they will deduct the TDS. Whatever is your tax which is coming, they will be deducting the TDS of that amount. And since they have deducted the TDS, now you will get a facility that the assessee, you would be exempted from filing your return. You don't have to file your return. logical also. These guys are quite old, 75 years or more. So they are getting relief that whatever the income they are getting in one account only. Obviously, see, imagine a situation that a person is 75 years or more. So he's quite old. He will not open account in many banks. He will open account in only one bank. He's 75 years old, right? You don't want to earn that much money now. He's just okay with everything now. He's quite satisfied now. He or she is quite satisfied now. So they will open generally one account only. Generally, they will open one account only, and generally they are getting pension and interest. That too, whatever the amount they have saved in their life, they have deposited in the bank. They will not go in share market, and they will not go in mutual funds, etc. I am not saying they can't go, but generally speaking, the person who is 75 years of age, he has lived his life. He has lived his life. Now this person is satisfied. So generally they keep their money in the bank account, and the same bank account they will open. So this is a facility which is given to them, that whatever the income you are earning, if there is any tax, if there is any, then the bank will take care of this tax. They will deduct this tax along with the cess amount also, and you will be relieved from filing your return. So in this case, they are asking that what would be the amount of tax deductible. So whatever is your tax liability, it will be deducted by the bank and by the SBI, and Mr. Sharma is not required to file the return of income. So in this case, whatever is his tax liability, 19,448, they will deduct the tax. So I think that you can easily write that as per section 194P, if you don't remember the section number in examination, so as per the TDS provisions, you can write it as per the TDS provisions. Since the assessee is having only one account and his pension and the interest is getting credited in the same account, so that bank is authorized to deduct the TDS of that person. Whatever is the tax amount, including the cess, that will be deducted and it will be deposited by the bank. And the assessee, if he is 75 years or more, then he would be relieved from filing his return of income. Everybody okay? So I'm not writing this. I think that it is, you have understood. Now, is Mr. Sharma required to? Again, they are asking, is Mr. Sharma required to file his return of income if the fixed deposit of 20 lakh was with Canara Bank instead of SBI? No. They are saying other facts are remaining the same. The only change which they are making is that his pension is coming in SBI, but his FD is in some other bank. It is in Canara Bank. So in that case, the section 194P can't be applicable because now you have more than one bank account here. So SBI will not be able to know that how much you are generating income from other banks. So here SBI will not be deducting the TDS, and he would be required to submit his taxes himself, whatever the taxes are, and also he has to file the return as well. Understood? Because here there are more than one bank account. So I believe that you will be able to do this. Give me a moment. Okay. This is page number 7.100. Illustration number 13. It says, Mr. Gupta is a resident Indian, is in a retail business, and his turnover for the financial year 23-24 was rupees 12 crores. So Mr. Gupta has a turnover of 12 crores. He regularly purchased goods from another person, Mr. Agarwal. So here, there is Mr. Gupta, whose turnover is in the last year is 12 crore. It is given in the question. And he regularly purchased goods from Mr. Agarwal. So in this case, we know that there is a section 194Q. Section 194Q says that if you are the buyer, Mr. Gupta is a buyer, he is purchasing things from Mr. Agarwal. Mr. Agarwal is a seller and Gupta is a buyer. So this 194Q says that in case you are such a buyer whose turnover in the last preceding year is more than 10 crore. So as per this section, if your turnover is more than 10 crore, here it is 12 crore here. So it is more than 10 crore and you purchase from someone more than 50 lakh rupees. If you purchase someone the goods of the value more than 50 lakh rupees. So if Mr. Gupta, you are such a buyer that your turnover is more than 10 crore. And if you will purchase in a year, in this year, if you will purchase from Mr. Agarwal more than 50 lakh rupees, then you should deduct the TDS at a rate of 0.1%. At a rate of, so TDS would be deducted at a rate of 0.1% in excess of 50 lakh. So it is quite a special section. Generally, in all the sections, we see that we deduct TDS on the entire amount. But here in this section, we will deduct the amount only in excess of 50 lakh. So let's say, for example, we have purchased from Mr. Agarwal, let's say in the year when the year started, let's say in the year of April, in the month of April, May, June, etc., we have purchased amount of goods of 30 lakh rupees. So as of now, we will not deduct the TDS. But let's say again we have purchased the goods of 35 lakh rupees, then we will deduct the TDS. Why? Because the total is going now above 50. So now in this case, 30 lakh first, let's say in the month of April 24, we have purchase of 30 lakh. We will not deduct the TDS here. Let's say in the month of June 24, we are purchasing again for 35 lakh. Now it is, the total is how much? 65 lakh. So should we apply 0.1% on 65 lakh? No, in excess of 50. So in this case, you will be applying on 15 lakh. On 15 lakh, you will be applying 0.1% here at the time of this particular 35 lakh, right? Not here, but here you will be applying on in excess of 50 lakh. Let's say again, so you have purchased for 30 lakh, 35 lakh, and here you have deducted the TDS on 15 lakh. Let's say again you are purchasing it for 20 lakh rupees. Then obviously already 50 lakh rupees has been exceeded and we have started deducting TDS. So here again you will deduct 0.1%. Everybody agree? If Mr. Agarwal does not furnish his PAN number, so we understand if the deductee does not furnish his PAN number, then the rate of TDS will becomes the effective rate of that section or 20%, whichever is higher. So if the deductee does not furnish their PAN number to us, the rate becomes effective rate of that section or 20%, whichever is higher. But here actually 20% would be too much amount. So if you compare, the effective rate is 0.1%. The effective rate is 0.1%. And if this person is not furnishing his PAN number, we will make the TDS rate 20%. 20% is too high in this section. For this section, 20% is too high. So in this section, they have kept that if you will not furnish your PAN number, we will not take it to 20, we will take it to 5%. So in all other section, it is 20, but except this section 194Q, it is 5%. So 0.1 or 5%, whichever is higher, if you don't furnish your PAN number to us. So Agarwal, please furnish our PAN number so that we can deduct 0.1%. If you don't furnish, then 5%. Then 0.1 will become 5%. Everybody is okay till here? Now, there is a simultaneous parallel section 206CH. So there is a section in TCS also. The section in TCS says that Mr. Agarwal, if you are the seller, see TCS is tax collected at source where the seller collects the TCS. So if you are the seller and your turnover is more than 10 crore in the last year, it is more than 10 crore in the last year, then you should also collect TCS. Then you should collect TCS at a rate of 0.1% from the buyer. So from the buyer, when he will be purchasing it from you, collect extra TCS, 0.1% in excess of 50 lakh, in excess of 50 lakh. Correct? But at a particular time, only one section can be levied. So let's say, for example, Mr. Gupta's turnover is also more than 10 crore. Mr. Agarwal turnover is also more than 10 crore. Now there is a fight between these two. So he is saying TDS and he will saying TCS because his turnover is also more than 10 crores. So in this case, who will win? TDS will win. So TDS will win. So in this case, TCS will not be applicable. Only TDS will be applicable. Got it? So 194Q would be applicable. TCS will not be applicable. But yes, if there is no fight, then it's okay. Whatever is the section applicable, that would be there. So let's say, for example, his turnover is more than 10 crore. His turnover is not more than 10 crore. So obviously TDS, there is no fighting between these two. Let's say, for example, his turnover is more than 10 crore. His turnover is less than 10 crore. Then also there is no fighting because TDS will not apply. Only TCS will apply. The fighting would be only if both their turnover is more than 10 crore. So in that case, TDS will win. And in TCS also we see that if the other party does not furnish their PAN number, if the other party does not furnish their PAN number, we deduct TCS at that rate, effective rate, or 20%, whichever is higher. Again, 20% would be a too much amount for him. Again, 20% would be a too much amount of him. So if Mr. Gupta, let's say, for example, TCS provisions are applicable and Mr. Gupta does not furnish his PAN number, then the TCS rate will become 0.1% or 1%. It is not 5 even, it is 1%, whichever is higher. So 0.1, if you don't furnish your PAN number, the TCS rate will become 0.1% and 1%, whichever is higher. Guys, this TCS provision actually, it got scrapped by this recent budget, but that is not applicable for your examinations. That would be applicable from May 2027 and May 2026 and onwards, right? So this TCS provision has been deleted in the recent budget, but that would be applicable for the examinations those students would be giving in May 26 and onwards. But as of now, for our examinations, it is here. Okay. Now, Mr. Gupta is a resident Indian, is in the retail business, and his turnover for the financial year 23-24 was 12 crores. He regularly purchases goods from another resident, Mr. Agarwal, a wholesaler. And the aggregate payment made in 24-25 was 95 lakh. So we have made an aggregate payment of 95 lakh. So on first 50 lakh, we will not deduct the TDS, but on 45 lakh, in excess of 45 lakh, we will deduct the TDS at a rate of 0.1%. So 95 lakh, how we have made it, they have given the details also, that how this 95 came up. So 20 lakh, we have made the payment on this date, 25 lakh on this date, 22 on here, 28 here. So obviously here we will not deduct any TDS because it is less than 50. Here also 20 plus 25 is 45. Here also we will not deduct the TDS. Here, yes, now it is going beyond 50. So because it is 20 plus 25 plus 22. So add them up and in excess of 50 deduct the TDS. And here also on 28, obviously everything is now more than 50 lakh rupees. Now here TDS will be deducted. In all, 45 lakh, TDS will be deducted. On 45 lakh, 0.1%. Why? Because Gupta's turnover is more than 10 crores. Assume that the said amounts were credited to Agarwal in the books of accounts of Gupta in the same day. Same day we are giving this amount also to him. Okay, that's fine. Mr. Agarwal turnover for the financial year was 15 crore. So now they are saying that Agarwal turnover is also more than 10 crore. So Mr. Gupta's turnover is also more than 10 crore. Agarwal turnover is also more than 10 crore. Buyer and seller are fighting. So who will win? The TDS provisions will win. So TDS will apply 0.1% of 45 lakh. So based on the above facts, examine the TDS TCS implications, if any, under the Income Tax Act. So based on this, TDS provisions will applicable, TCS provisions will not be applicable. Got it? So it would be 0.1% of 45 lakh in excess of 50 lakh. Would your answer be different if Mr. Gupta turnover is 8 crore and all other facts remaining the same? Okay. So they are saying if Mr. Gupta's turnover is 8 crore. So if Mr. Gupta turnover is less than 10 crore, so in that case, TDS will not apply. Only if then in that case, TCS will apply. And TCS will be also be the same 0.1% of 45. Now, would your answer in 1 and 2 change if the PAN has not been furnished by the buyer or seller as required? So if the PAN is not furnished, so my answer will change. In the first, my answer will become, so if the PAN is not furnished, then 0.1 TDS. TDS, it would be 0.1 or 5%, whichever is higher. So obviously 5% of 45 lakh would be my answer. And in this case, TCS is getting applied and the PAN is not furnished by the buyer. So it would be 1% of 45 lakh. Guys, have you understood this or not? Quite an important question, everybody, but it's not that difficult. So I'm not writing it. I read that you have understood. This was the illustration. So we have done all the illustrations of this chapter. Let me see some questions also. Okay. Quickly, let us pick few questions. Ashwin doing manufacture and wholesale trade furnishes you the following information. So it is Ashwin individual. Total turnover for the financial year is 23-24, 1 lakh, 1 crore 5 lakh, 24-25, 95 lakh. The last year turnover is more than 1 crore. Current year turnover is 95 lakh, less than 1 crore. Current year turnover does not matter. Last year turnover is more important for TDS purposes. So this individual is a big individual, right? His turnover is more than 1 crore. Examine whether the TDS at source provisions are attracted for the below said expenses incurred during the financial year 24-25. Whether we should deduct the TDS or not. Interest paid to UCO Bank on 15/8/2024. So whenever we are paying interest, so whenever we pay interest, generally, so these are not interest on securities. Obviously, I am an individual here. So Ashwin is an individual over here. He has not issued any securities. So if he individual can't issue securities, companies can issue securities. So if company would have issued securities, they would have deducted the TDS under section 194. Sorry, it was section 193, right? So interest on securities. But if it is interest other than securities, so anybody who is paying interest which is other than securities, then we have sections 194A. So in this case, if Ashwin is paying interest to someone, then it is not on interest on securities, it is interest other than securities, then 194A would be applicable. And it says that the TDS rate would be 10%. But if we are paying this money to bank or financial institution, then we will not deduct the TDS. So here, what to whom we are paying the interest? We are paying the interest to a bank. So if we are paying this interest to the bank, so in this case, there would be no TDS implications. So what you need to write it over here? As per the TDS provisions, whenever the interest is paid and by the individual whose turnover, just write this provision, whose turnover is more than 1 crore rupees, they are required to deduct the TDS at a rate of 10% on the interest payment. However, if the interest is paid to the bank or financial institutions, then TDS provisions will not be applicable. So in this case, we will not deduct the TDS here. If we would have paid to somebody else, let's say if we have paid the interest to Mr. X, Mr. Y to somebody else, then TDS will apply. We are paying this interest to some partnership firm. We have taken a loan from that partnership firm. We are paying to them. Then TDS provisions can be applicable. But if we are paying it to the bank, if the receiver is bank or financial institution, do not deduct the TDS. Contract payment. Okay. Now this person is an individual whose turnover is more than 1 crore. He's a big individual. And he's making a payment for a contract. So we understand 194C is there. But 194C will say that if the single contract is more than 30,000 or in aggregate 1 lakh. So let us see contract payment to Raj. There are two contracts of 12,000 each, total 24,000. See, 12,000, 12,000. None of the single contract is going beyond 30. Aggregate is also not going beyond 1 lakh. So there would be no TDS implications here as well. Why? Because of the threshold limit. Shop rent. So he's an individual and he's paying shop rent 194I. 194I says that if you are an individual whose turnover is more than 1 crore, yes, he is of last year. And if you are paying rent of more than 2,40,000 rupees. So here you are paying rent of 2,50,000 rupees. So yes, TDS provisions would be applicable. And it is rent of machine. If this would have been rent of machine, 2%. For other rent, it is 10%. So 10% TDS would be applicable. So 25,000 rupees. So here you have to mention the provision that as per section, if you remember the section number 194I, then fair enough. Otherwise, as per the TDS provisions, if the individual turnover of the last year is more than 1 crore, then he is required to deduct the TDS on rent at a rate of 10% for building if the threshold limit is more than 2,40,000 rupees. And here it is more than 240. So it would be 250 into 10. Should we deduct only on the excess amount? No, on the entire amount. That excess is only in 194Q. Correct? Commission paid to Balu. So whenever we are paying commission, so there is a section 194H, which says that if you are paying a brokerage or commission, see, in commission we have 3 sections. One is insurance commission, 194D. So it is not an insurance commission. Second is lottery commission, 194G. It is not a lottery commission. For all other commission and brokerage, we have 194H. So 194H says that the 194H says that if the amount is more than 15,000 rupees, then you have to deduct the TDS. But here we are paying the commission of 7,000 only. So there would be no TDS over here. So only in this one, there would be a TDS. In other 3, there would be no TDS. And please remember 194H, what is the rate? Initially, it was 5%, but from 1st October, they have changed it to 2%. Everyone is okay with the first one?
Yes,
Okay.
sir.
Now,
Yes,
the
sir.
second one. Second says, compute the amount of tax deduction at source on the following payments made by Messrs S Limited. So, who is making the payment? Company. For company, the last year turnover does not matter. Even if their last year turnover is less than 1 crore, doesn't matter. If you are a company, it is only for individual and HUF we see the last year turnover. For other assessee, if you are a company, if you are a partnership firm, if you are any other person other than individual HUF, then we are not even concerned with your turnover. Even if it is less, more doesn't matter. So you are a company. During the financial year, as per the provision of the Income Tax Act, please compute the amount of TDS. So here we have to compute the how much TDS will be deducting. Okay. So on 1/10/2024, they are making a payment of 2 lakh to our transporter. Forget about everything. Please tell me under which section, what do you think? Try to recall the section under which section we deduct the TDS for the transporter. Vignesh, you are saying something. 194C. Correct. Vignesh, Sugandha, correct. So it is 194C. That is, we are making a payment for a contract, for a transporter for a contract. But if this transporter, if he's not a passenger transport, no, goods transport. So if he's a goods transporter and he furnishes a declaration that, sir or ma'am, I don't own more than 10 vehicles during the year, and I give this declaration along with the PAN number, then we will not deduct the TDS. So a transporter who owns 8 goods carriages throughout the previous year and furnishes a declaration to this effect, and he's saying that, yes, I own less than 10 vehicles, not more than 10 vehicles, along with this PAN number. So in this case also, there would be no TDS. Next, on 1/11/2024, this company is making a payment. For whom? Payment for fees for technical services, 25,000. Technical services, 194J, 2%. But if the threshold limit is 30,000 rupees. And royalty payment of 20,000 rupees to Sham, who is having a PAN number. Okay. So we are making a payment of 25,000 also and 20,000 also to Sham. So total we are making a payment of 45,000. But we understand in 194J, there are 5 things and we have to apply the limit separately on each one of them. For technical services, we will apply separately 30,000. For professional services, we will apply separately 30,000. For non-competing fees separately. For royalty separately. But for director fees, there is no such limit. So director fees we will always deduct. So in this case, we will again not deduct the TDS because separately we are making the payment of less than 30,000 rupees. Now, on 36/2024, payment of 25,000 to Mrs. X Limited for repair of the building. First of all, forget about the amount. Tell me if we are making a payment for the repair of the building, under which section we will deduct the TDS? We are making a payment for the repair of the building, for repairing things. Under which section? What do you think? Try. What do you think? Under which section we will deduct the TDS if we are getting a repair done? Try. You might be right. You might be wrong. Doesn't matter.
94M.
It is 194C.
EP.
Payment to a contract, because repairing done is also a work done. Whatever is a work done, it is contract 194C. Correct. So it is 194C for business. Correct. So we are getting a repair done 184C. Again, the threshold limit is for a single contract 30, multiple contracts aggregate 1 lakh. So we are making a payment of 25,000. Again, there would be no TDS. Now, on 1/1/2025, we are making a payment of 2 lakh made to Mr. A for purchase of diaries. So we are purchasing diaries from Mr. A and we are making a payment of 2 lakh. Now see, if we are supplying our, let's say for example, we are supplying our blank diaries. For example, I'm a company and I'm supplying a blank diaries to my job worker. And I'm saying that please print my logo over here. Print my logo over here. I'm just supplying this diary and I'm saying that print this paper. Let's say, for example, I am just supplying them this thing, plain diaries, and I'm saying that print on this cover page and print my logo over here. So this is actually a work done. But if I am telling you that please supply me a diary and I'm giving you the specification, it should be a spiral diary with, let's say, 200 pages. I'm telling you that I'm giving you specifications that it should be a spiral diary with 200 pages. The cover page should be quite a colored color page, quite attractive, and it should have my logo. Please supply it to me. You will say, okay, sir, I will charge 200 rupees per diary. So what you are giving it, I'm not giving you anything. I'm giving you specifications. And now you are actually giving me this diary. I've said it should be a spiral diary. It says spiral diary. Now you are giving it to me. The cover page should be very colorful and attractive. It should have my logo and you are giving it to me. So what are you doing? I am purchasing, you are selling me the diary. I'm purchasing diary from you. I'm not getting a work done. I'm actually purchasing diaries from you. So here the payment of 2 lakh made to A for the purchase of diaries made according to the specification of S Limited. So S Limited has given the specifications. However, no material was supplied to Mr. A by S Limited. S Limited has not supplied any material to you. So I have not supplied any material to you, or neither any of my associate has supplied any material to you. So in that case, it would be a purchase transaction. It is not a work done. So again, 194C would not be applicable. So it is not actually a work done. It's a purchase transaction. Got it? Now, on 1/1/2025, payment of 2,30,000 made to Mr. Bharat for compulsory acquisition of his house as per the law of the state government. So as per the state government, we are compulsory acquiring it. So there is a section 194LA. 194LA says that whenever there is a compulsory acquisition and the threshold limit is 2.5 lakh, 2,50,000 rupees, TDS would be applicable at a rate of 10%. So here the threshold limit is not more than 2.5 lakh. So again, there would be no TDS. Payment of commission 14,000. So commission we have already discussed. 15,000 is the limit. Again, there would be no TDS. Got it? So I believe that most of the sections of TDS we have discussed already. So I'm keeping it till here today. So let us continue in our next session. Tomorrow is Sunday, so we'll continue it on Monday, day after tomorrow. Thank you so much. Bye and take care.
Thank you, sir.
Thank you,
Thank
sir.
you,
Bye,
sir.
guys.
Thank you, sir.